Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining in for today's video. Before we start, make sure to subscribe to our channel so you don't miss out on any future content. While you're here, give our video a like and make sure to leave a comment below with any questions you may have or suggestions for an upcoming video that you would like to see. If you'd like a more in-depth look into our trading day, we would love for you to join us in our live trade room for 3 days. It's totally free. The free trial link registration can be found right in the description area or by going to ssftg.com. So let's jump into today's video. All right, so for today's topic, we're going to be talking about the 3-press top and bottom pattern. Now, we've done a video on this before, but really they're becoming a lot more prevalent. And when it comes to 3-press top and bottom patterns, the likely reason why they're becoming so prevalent is because there's so many more traders now. A lot of people are at home because of all the stuff going on, obviously. So there are a lot more traders and technicals are becoming a little bit more relevant. So I wanted to do kind of a refresh of what this pattern's all about. So first off, what do I mean by a 3-press top and bottom pattern? So what we need to do is first understand what that is. In the simplest of terms, a 3-press top or bottom, very simplistic, I want to see 3 drives up to a new high or 3 drives down to a new low. That's the 3-press top and bottom. And what we're looking for is some form of resistance to be a seller around the top of that area, looking for it to break back down again. And preferably, if possible, go back with a longer term trend. So that's the generic look of a 3 top, bottom, and really the big thing to understand here is that this is the clean version. Actual charts, they're not going to be as neat and tidy as with everything when it comes to trading. But really, they all consist of the same thing. So if we're breaking it down, you have the initial breakout momentum, right? You've got the initial drive up, then you've got the breakout pullback buyers, and then you've got the higher low trend pullback buyers. And that gives you your 3 press. The thing is, after all of these buyers are in, if the trend can make it to that point, that's typically where everybody is looking to take profit in around the same place. So we end up getting the situation of, okay, well, these buyers were driving up, they started the party. That means that they're low probability traders, right? They're not going to win very often, but when they do, the reward is monstrous. Then you've got the breakout pullback traders. These are the one-to-one guys, right? These are the ones who are buying on the pullback with a stop here and a target here, one-to-one, bingo, bango, easy peasy. But then you've got the late to the party, higher low trend pullback buyers. And this is where buyers will start coming in looking for this to convert into a significantly larger trend. What typically ends up happening, though, is the market will put in that third top, and that's where the buyers from earlier, these buyers here and these buyers here, are all taking profit. And sometimes their profit taking can be so extreme that it causes this third leg down to be a lot more aggressive. Now, from there, the trend can resume and keep doing whatever it wants, but we're looking for that big drive down, and that's kind of what the whole idea of the pattern is waiting for that initial breakout momentum, then the breakout pullback buyers, and then they come in a little bit too heavy, and the higher low trend pullback buyers get dumped on. Now, the trend completion for the areas of interest when targets for all of the traders are being met, and that's why it reverses so aggressively, typically is a little bit nicer when it's lining up with something else. So if you've got a zone of resistance coming across here already, and then you get a 3-press high into it, now you've got something going in your favor. And typically, the end of the trend, when you're using it in correct context, is what this pattern will lead to. This is usually a reversal type pattern that can sometimes reverse an entire day's trend back the other way. So that's kind of the goal of it, is a lower probability but massive reward potential type move. And that's the big thing about them, is they offer a really good risk reward. Hard to beat risk reward when you're talking like 5-to-1. So a couple examples that we can go through here. They come in all shapes and forms. You can zoom in really, really, really close like we have here, where you're looking very close and tight to current price action. And what you're looking for are 3 presses, right? You've got 1, 2, 3. That's your third press. Now, when the market comes back up, it could make a lower high. You could be looking for a second short. You could be looking to trap the sellers and sell underneath a bear bar. You could be looking for a Fibonacci pullback. I don't care how you get in, but the fact of the matter is that we had the pattern form right through here. Now, you can even widen this out a little bit further and say, you know what? It can be really arbitrary, like we said at the beginning of the video, where you could say, hey, 1, 2, 3, right? That whole thing could be 1, 2, 3. The important part is that it actually physically tests it. That's the key. We need to see that third leg actually hit the level. It can go above it, but I don't want it to fall short, right? Falling short is a problem. What I would really like to see is the market just do like this, where it just gets blasted off from there. But that doesn't obviously happen every time. So when you're looking for these types of patterns, you want them to line up with other areas of interest, like a major level of support, and then go from there and try to find a follow-up way to get in. Here is an example. The market is dropping aggressively, and the last time the market had that was that nice little flag pattern that they broke out of and went ripping to the highs, and then it just got obliterated. Well, what happened, right? Well, they came back to the zone of interest down here, and what did they do? We've got 1, 2, 3. They got 3 presses to the downside, and we start seeing reversals, and they start pushing up. Doesn't mean that this is necessarily going to be the bottom, because remember, you can always widen this out and say, well, what about this one? Right? That's there too, just as much as all of the other ones. The important thing that we're looking for is a way to find a low risk, high reward scenario. If I have a 1, 2, and 3, and we form a higher low, and I've got a reason to be a buyer, then I know that I can be a buyer here, and my stop doesn't have to be very big, but my reward potential could be way up here, so it's worth it, right? In this case, this one would have failed, depending on what you were looking for, but then you can widen it out and look for the next one, and here you've got an obvious 1, 2, 3, and they bounce off of it, got the higher low again, and another shot to go in, right? Your stop, it's down below the lows, but your target, look at the move, right? I mean, it doesn't have to work every time, because when it does work, it pays off of the other ones that didn't really work out that well. 3 press patterns are some of the best risk reward opportunities you can get up there. But realistically, it comes down to context. When you're looking for any type of pattern, context is everything. A good pattern in a horrible place is still a bad trade, right? It's all about location, but this is a potential way that you can maybe use to find your way into a setup that fits your rules in terms of location, but nothing else is really lining up. This is a nice way to kind of offset that and find a way into the market that maybe you wouldn't have had otherwise. Either way, though, if you have any questions about it, feel free to send me an email, jhb@ssftg.com. I hope you had a great trading day, and as always, we'll see you in the next one. Thanks.